So Malaysia's economy is built on trade, and the United States remains one of our largest export destinations. But with Washington's latest tariff hike, just how exposed are we to this kind of external shock? Now, to unpack these questions, I'm joined by Yugendran Kannu Sivakumaran, research analyst at the Economics and Public Policy Department of Bait Al-Amanah. So, Yugen, how vulnerable are we to this kind of tariff shock? And what does this mean for our GDP outlook?
Well, thank you so much for asking that question. We are, if I'm not mistaken, Malaysia's third biggest export partner is the United States. We export around in 2024, around $52 billion worth of goods to the United States. A 25% blanket tariff simply would be catastrophic for the Malaysian export economy, because we are looking at possibility of slowdown of GDP growth and maybe even retrenchment. But of course, this is mostly in the short term, because in the long term, Malaysia, we would probably shift into looking into other markets. But again, this can definitely hamper the Madani's government into looking to increase foreign direct investment and also to grow the economy at a rapid rate.
So in your opinion, Yugen, which Malaysian sectors will be hit the hardest by these tariffs? E&E, palm oil, rubber-based products? Could this unravel key foreign investment flows?
I would say the E&E sector, and that's because just of how naturally it's built. The E&E sector is, again, how do I say this? It's the cost of the product is a higher value add. So a 25% tariff will definitely add into that costs. And in addition to that, the Trump administration wanted to bring in more E&E production into the United States. So this is definitely something that has been planned and is basically the largest sector that I feel would be affected in Malaysia.
Well, Yugen, it's also well documented that Malaysia face some sort of global supply chain disruptions. How will this tariff compound inflationary pressure or job risks in these affected industries?
Well, when we look at it, consumer confidence is one thing that will be hampered by the tariff scare. So we could see the ringgit weakening. We have seen it weaken when the news came out. So this may further weaken the ringgit if measures are not took into place or negotiations are not done at a timely manner. And that can add to inflationary pressures because, as you know, Malaysia is not self-sufficient and we are highly dependent on imports of goods.